Good morning, everybody. Let me get a screen up for you here. And YouTube is unmuted, and I've got a giant sign on my desktop that says unmute. So when I sit down, we're good. And Cav, absolutely, I'm talking to you. And I'm talking to me, and I'm talking to everybody in this room. The stuff, good morning, everybody. The stuff that I put in the room, guys, earlier, read it, think about it. And I can tell you guys, good morning, everybody. Good morning, Bob and Steve and Joel and Gary and Erla, and it's great to have you guys in here. It's going to be an awesome day. It really is. I posted some stuff in the room. Hey, JW. And guys, what I posted was straight from the Nexgen website. Trading psychology, straight from the website, guys. Get on simulator. Take a very solid plan, Todd. I've got it recording, and I've got a big note on my desk that says unmute. So when I come back from break, that's going to be the first thing I see. Guys, complete your education on the simulator. Market replay. A lot of people test their plans too early and live, and the problem is a lot of people go live and they don't even have a plan, and that's what I want to talk about, guys. Is today we're gonna focus on a plan, and you can read all that stuff. It's in the chat box. Today we're gonna focus on a plan, and a plan is established, is created, is built through repetition and testing, guys. Through going through and making sure that your rules have been proven to win more than they lose, and we're gonna have Friday touchy-feely, emotional, give you guys big hugs kind of day. Most people, and I'm not saying you, but most people feel entitled to win because they purchase software, feel entitled to win because they're leasing software, feel entitled to win because, let's face it, you're a big deal and people like you. But the reality is most people won't focus on what brings success. Most people won't keep it simple. Most people won't take a simple set of rules and learn how to follow those before they start looking for everything else. Exactly, Bob. One of my favorite things, man, Ron, I did. That's exactly why I felt entitled when I started trading, because my last name is Novak, damn it. When you close TradingView, Bob, they give little messages every now and then, and one of my favorite messages is the market doesn't care about your opinion. And I love that because it's so true. It doesn't matter, and that's why we trade patterns. That's why we learn these patterns, we focus on them, and we commit to them, because we can prove through historical study that these are patterns that win more than they lose. And guys, I'm going to tell you right now, everyone in this room has seen me give away the KISS plan 100 times. And I would say there's maybe one or two of you that have actually followed it, because I saw Ron C. do this trade, and now I need to do that trade. And I see Pete making profits, and I need to do what Pete does. And guys, don't do what Pete does. Pete's plan is Pete's plan. Pete's plan is through, gosh, 7 or 8 years of practice. And there's a lot in Pete's thinking that doesn't translate onto the paper. And if you asked me to define Pete's plan, I couldn't do it. I feel like it changes every day. To Pete, it's probably consistent. And I'm sharing this because one of the things that I tried to do as a new user, guys, when your last name is Novak, when your big brother is John Novak, you see him trading, and all you want to do is what he does. All you want to do is be like him. All you want to do is take the trades that he takes and manage them the way that they manage them. And guys, the reality is that if you gave me, and I'm showing my age here, Mario Andretti's Ferrari, and you said, go run laps like Mario Andretti, I would put it in a wall. In the first lap, I would be bursted into flames, and they would be putting me out, the invisible fire. So, guys, stay in your lane. That's kind of what I want you to do this day. And think about it. If I'm not finding success, and I put this in the room too, and I'm going to read it again. If you are losing more than you win, if you're struggling to find trades, if you're hoping things work out for you when you take a trade, guys, I want you to ask yourself 3 things. Do I have a plan? Do I have a written plan? Do I have a plan that has been proven to win more than it loses? Have I proven that plan to be effective? Those are your first two questions. Do I have a plan? Has that plan been proven by me to be effective? And then the final question, guys, is am I following it? And I'm going to tell you that the people that have a plan, the people that believe in their plan, and the people that follow their plan are very rarely the people in this room that are struggling. And I want you to take that to heart as we go through the day, as you go into the weekend. I'm going to hand you, before this first hour is over, or within the second hour, I'm going to hand you a plan that is testable. I'm going to hand you a plan that is provable. I'm going to hand you a plan that has been verified to win more than it loses. And if you are in a position where you're not finding success yet, you are going to have the option to streamline your focus to one plan that provides proven results. So let that rattle around. We're going to go through our day, guys. And our day starts at forexfactory.com/calendar. Forgive me, I am in the pulpit today, guys. Whole lot of FOMC members speaking, guys. They're calling them all low impact, with the exception of the 10:30 a.m. I guess Waller is cooler than the rest of the kids. Look at next Thursday. Goodness, mine doesn't even go that far. Oh yeah, it does. Next Thursday. Oh, that's going to be a lot of news, right? That could be a market disrupting event, guys. But today, 10:30, might be a good time for a sandwich. I check news every day because news disrupts patterns. That's funny. Does he like deep dish or does he like thin crust? And then, guys, everything that I'm talking about is coming from the Nexgen page. Everything, all the answers, all the rules, all the pictures, all the videos are coming from the trading guide. Indicators, Discord community, frequently asked questions. Guys, understanding, this is the trading plan rules. This is what we're talking about today. We're going to talk about a high probability trend trade. We're going to talk about a trade that has been proven to win more than it loses. We're going to talk about a trade that gives you the potential to win in that 70 to 80% range if you follow the rules. A lot of confidence comes from that trade. And guys, we're going to talk about everything. We are going to define the entry for this trade. We're going to talk about the advantages for the trade. I think so, Aaron. Aaron asks, on days with a lot of announcements, should we even bother to trade at all? I believe yes. The announcements, Aaron, if I have an announcement at 8:30 a.m., I'll trade up until about 8:25 before that high impact news, and then I'll exit positions and I'll wait for the news. And typically the reaction from the news release, Aaron, lasts 2 to 3 minutes, and then the market goes back to doing what it does. Sometimes there's big reactions that come from the news release, and yeah, it can kickstart things. It can create a quick run, and then it kind of gets back to normal. And it's not the reaction of the news that I find detrimental. It's not the announcement or what it is. What happens is, and I don't know if I can find a news release today, there wasn't one today, is Aaron, you may get all of this movement in a minute from a news release, and it may just go crazy. But what you'll find if you go back and study a news release, ladies and gentlemen, is that termination conditions still typically work, and these patterns still repeat themselves. They're just repeating themselves too fast. They're just entirely too fast for me to place an order, for me to enter a trade, for me to exit a trade, for me to manage a trade. And that's why we avoid news. So, Aaron, the only day that I go guaranteed golfing day is FOMC day. I have a track record over the last 5 years. I'm like 0-100 for trying to trade it. I just don't care for it. And that's my own personal decision. You're welcome. And guys, ask any questions you have. I will answer everything as truthfully as I know how. We're going to talk about this high probability trend trade because, guys, this one teaches you to read your indicators. Um, One of the things that we're doing is we're focusing on having an edge. Every time you take a trade, you want to have an edge. Every time you take a trade, you want to know that you're trading a pattern that has been proven to win more than it loses, that you are getting into the market and you know that this pattern typically wins 70 to 80% of the time, and you know that this pattern typically loses 20 to 30% of the time. And then, guys, there's no surprises going in the market. There's no emotional connection to wins and losses because you know both are possible every time you enter the market. And 90% of your day will be waiting for that edge. 90% of your day will be waiting for that advantage. And if you find yourself taking 50 trades a day, you're likely over trading. And if you find yourself taking 1 or 2 trades a day, there's a good chance you're overthinking. So what we're going to do is we're going to break down 3 rules. Individually, what it means to have strong triggers, what it looks like to have strong triggers, what the advantage of strong triggers means to you. And what it means to you is that you have momentum. You have a market where the odds are favorable for it to push in the direction of the trend. And then we're going to go to termination conditions, and we're going to talk about areas that can stop the market. We're going to make it so that you understand when you have room to profit targets. And we're just going to call that the advantage of a clear path, guys. And when you have a market with momentum, true momentum, not, oh my gosh, it's almost okay momentum, or I wish I was in a trade, I'm going to call this momentum. Guys, when you, honest to goodness, have strong triggers and absolutely nothing in the way, you have what you need. You have the core, the foundation to creating an amazing trading plan. And you're going to see people doing it in this room. And these are only the first 2 advantages. Your third advantage for the brand new user, for the person backstepping looking for consistency, is to define an entry using a smaller chart that uses a level of precision that allows you to do it with a limit order, to wait for the market to come to you. And when you talk in terms of a brand new user, somebody that's new with me, if you're evaluating the software, or maybe you're coming back because you're spinning your wheels and you're not finding the success that you wanted. Guys, focusing on momentum first, having it, coupling it with a clear path, creating those core 2 advantages, and then you're going to define an entry. You're going to define an entry for the highest probability trend trade Nexgen teaches. You're going to define an entry that typically wins 70 to 80% of the time. You're going to define an entry that creates confidence through that memory of success. And you can find these 3 rules on only 2 charts. And I want to take a picture real quick because I don't think I stressed this enough. This first bar, the first bar on your large chart, is enough to define direction, momentum, and areas. The very first bar on the large chart will let you know if rule number 1 is met and if you have momentum. And the very first bar on the large chart will let you know if you have a clear path, if there are rooms to your profit targets, guys. So your first 2 rules are met on this big slow moving chart, this very broad stroke of a brush. And it's imperative that you let that large chart lead the way, that you insist that the large chart give you those advantages. And I want to show you why we use 2 charts. Because I'm going to draw a box. And this bar's not even done forming. I'm going to draw a box around that bar, and I'm going to open up a smaller, faster chart. And I want you to see how the market moves inside of that one bar, that very broad stroke of a brush. I want you to see that I've already got 7 or 8, 9 bars, and it appears that it's going up, but the large chart is definitively going down. By allowing the large chart to lead the way and then going to that smaller, faster chart, you're refining that big, slow moving information, and you're going to be able to pinpoint where the market is most likely to bounce and continue with the trend. And by using that refinement chart, that smaller chart, that faster chart, what you're doing is you're giving yourself the ability to reduce risk and to really maximize your profit potential. So when we talk about looking for the trade, everything starts on the first bar of the large chart. Don't get caught up looking at the things that happened an hour ago. Inside of this one bar, guys, you'll be able to define the direction, the momentum, and the areas of the market. You will have rules 1 and 2 met before you ever go to a smaller, faster chart. And we're doing that because the large chart, that slow chart, that broad stroke of a brush, guys, it's a representation of the large crowd, the men and women that establish trends and create momentum, and the men and women that react at those key areas. And the large crowd typically wins. Typically, not always, but they typically win. So if you're trading with the large chart, trading with the large chart direction, the large chart momentum, the large chart clear path, you're putting yourself in a position where you're more likely to win more than you lose. And then the small chart is the small crowd, and this is the fight. This is a little push down that's created by people with a lot of money but not so much that they can typically win against the large crowd. The small crowd, when they fight, when they push down versus everything that says up, they typically lose 70 to 80% of the time. Rule number 3 on that smaller, faster chart is designed to get you into the market right where they're most likely to lose, right where the market is most likely to bounce and continue with that big trend. And guys, there's a great example of it as we go through the refinement process. One bar, I have both up and down. The small crowd tried to fight everything the large crowd said, and the large crowd said, no, we're going to push you back down. And now you can see the small crowd fighting again. So embrace the idea that trading with a large crowd is your highest chance of success. We're going to break down the trigger rules, guys. We're going to go through and learn the trigger line and Fibonacci rules for when it's okay to trade. It is okay to trade when my rules are met because my rules have been proven to win more than they lose, guys. There is a level of confidence that comes through trading with rules that is unparalleled. You guys have the ability to simulate, to practice, to post in the room. And I'm going to encourage you to post in the room because that's actually how you're going to get to where you want to be the fastest. Every time you take a trade, every time you look at a chart and you have a question, drop it in the room. Tell me what you see. Talk about why you did what you did. And I think most importantly, every time you take a trade, and I don't care if you win or if you lose or if it's just a break-even trade, write the rules on the chart. And I'm not saying write them because they were met or weren't met. Write strong triggers on a chart and then put a yes or a no. And then write termination conditions and put a yes or a no, and put area inside of triggers and put yes or no. And what you're doing is you're teaching yourself to follow rules. Every time you take a trade, you're holding yourself accountable to the rules that have been proven to win more than they lose. And very often I see annotations that say, it was green, so I went long. I felt like it was a strong trend, so I went long. I thought that area should break and went long. And guys, the market doesn't care what you think. Write your rules on there. Post it in the room. Let's make sure that you're reading your indicators correctly. And if there's ways to do it better, we'll find it. And if there's a way to avoid the mistakes you're making, we'll find it. And all it takes is about 4 or 5 pictures from you in my room to let me know what you're thinking, to let me know how you're reading indicators, and to let me know where you're experiencing challenges, and then we'll work together to fix them. So don't skip out on posting in the room, but if you take the time to drop it in the room, if you ask for that private session, tell me what you see, guys. Please don't put pictures in the room with no writing on them and say, and just drop it. And I'm going to high five you and move on. I need to know what you see so we can make sure you see it correctly. If it's just a chart read, a lot of people put pictures of like termination conditions in the room. They're like, man, my rules weren't met. So I'm just going to take a picture of the termination condition. And I'm going to say, check it out. Man, termination, divergence from fibs. And I know that I'm setting myself up for something the other direction. And this is just a great example of how you can go through and work on your chart reading without actually having to take a trade. We will simplify today, guys. I'm going to keep it so simple today. We're going to talk about the three rules. We're going to break them down individually. I'm going to hand you a plan that optimizes your chances of success, a plan that has been proven to win more than it loses, a plan that has gotten brand new users with Nexgen funded in accounts within their first 30 days if they only learn and follow the rules. Your job is to learn the looks. And when I say learn the looks, it means that you've got to be able to recognize strong triggers. So we're going to break strong triggers down individually. We're not going to look for the money. We're not going to look for the management, guys. We're going to define an entry, and it starts with strong triggers. And then you've got to know what it looks like to have a clear path. And then you've got to know what it looks like to define your entry. And that's the second piece of the puzzle, guys. I'm going to hand you a spreadsheet right now. I'm going to drop it in the room. Yesterday, there was a little fear about downloading from the room. Guys, everything that I put in the room comes from my computer, and there's nothing that I would put in this room that I wouldn't download myself. Grab it. And this trade tracking sheet that I just dropped in the room, guys, this is going to get you where you want to be if you take the time to use it. The first tab is defining what it looks like when the rules are met. So if your job is to insist on strong triggers, there's 50 pictures of strong triggers. These pictures are annotated. It's not just saying, hey, strong triggers. It is taking the time. Come on. Oh no, that one is a dead link. We'll have to fix that. It's taking the time to describe them, to point them out, to talk about why they're strong triggers. And the same is true with weak triggers. It takes the time to describe why the advantage is gone, what it looks like when the advantage is gone. Same thing with the clear path, termination, conditions, entries, guys. So if your goal, and I hope it's your goal, is to follow a plan, it means that you've got to know what it looks like when your rules are met, so you know that it's time to execute a trade. But you've also got to know what it looks like when that advantage is gone and it's time to sit on your hands and do nothing. The second tab is just a place where you can look at what other next-gen traders have done. You can look at them using momentum and path. You can use this as a study guide to see what an entry looks like when the pattern is true. There's entry sequence patterns right here. There's ideas on management. And then the next tab is where you're going to build your plan. So, for example, Bob, I'm gonna drop your name in the room. Bob is working on a high volume area trade right now. Bob has mastered the trend trade. He understands the 50-50 trade. He's great at using momentum and path. And Bob's like, you know what? I feel like I'm ready to add something, an arrow to the quiver. So Bob's going to start taking pictures of high volume area trades, and Bob's going to fill up his spreadsheet, and that repetition is going to create recognition. Bob is going to be so in tune with this pattern. He's going to have 50 pictures of high volume area trades. So when Bob's watching the live market, he doesn't hesitate if his rules are true. And then he's going to have to learn how to manage those because it's a different trade. So there's an area for that and things that you see in the market. And then finally, there's trade tracking. And trade tracking is just a journal, guys. And you're going to post your pictures in here. And you might talk about your advantages. But most importantly, every time you post in the room, you're going to get feedback. My feedback when I first started with Nexgen was, Mark, you're trading in determination conditions repeatedly. You keep trading into areas that have been proven to stop the market more than they don't, and you're hoping that they break. So, Mark, we have to break you of this habit. Here's how you break that habit. Here's the routine to make it go away. And now it's up to you to practice that until you can avoid this problem. And guys, eventually it worked, and I stopped trading in determination conditions. But I didn't realize that I was trading into them. I thought maybe it had the potential to break, or because it was coming from here, that fib had to break, and I put absolutes in it. And guys, if you give me 4 or 5 pictures, we're gonna help you recognize the patterns bringing you success. We're gonna help you recognize the patterns that are taking success away, because you're going to ask yourself, you're going to study these pictures in the morning. What worked? What didn't work? What was relaxed and what made me nervous? And guys, you're going to see the patterns in the market, the patterns in yourself. And that's all learning to day trade is, guys. It's doing the same thing every day that has been proven to win more than it loses. It's taking the same trades every day because you have proven that they win more than they lose. And the more you deviate from that edge, the less likely you are to find success. So we're going to keep it super simple. And we're going to talk about indicators first, guys. What am I looking at when I open a chart? Both charts have triggers. Trigger lines have nothing to do with fibs or mid bands or one-to-ones. Trigger lines are simply small triggers and large triggers. Solid lines, dashed lines. Small triggers and large triggers. Solid lines, dashed lines. When they're green, they're going up. When they're red, they're going down. You will use triggers to define momentum first in the market. You will use triggers to define termination conditions, making sure that you're not trading into an area that has the potential to create a bounce. And you're going to use triggers for entry, guys. Triggers show up everywhere. Areas show up everywhere. You need to know the names because they have roles on different charts, and just know what they're called. There's divergence high lines. It's a magenta line, comes off of a pivot. There's a divergence low line. It's a cyan line that comes off of a pivot. Divergence is synonymous with loss of momentum. Divergence means the market is losing momentum. And when you see this, you're going to say to yourself, aha, the market is losing momentum. You're going to see red Fibonacci resistance, guys. And when the market is trending up, this is an area that could create a bounce down. You're going to see Fibonacci support. And when the market is going down, this is an area that could create a bounce up. And you're going to see it before you ever get to it. You're going to see yellow one-to-ones. You're going to see a mid-band. Know the names because on a large chart, these areas can stop a trend. On a small chart, they can stop that fight from the small crowd and create a bounce in the direction of the trend. And we're going to use these indicators. You got to learn the highest probability trend trade Nexgen teaches, guys. There used to be a section on the website that said your first 30 days and beyond, and that's what it was labeled. And I think that we need to get that back in there. Because for your first 30 days and beyond, if you focus on a high probability trend trade that happens after a strong top or bottom, you're going to give yourself the highest chance of success. So the trend trade is 3 rules, guys. I'm going to show you what a strong top or bottom is as well, because it's not a rule, but it even more so creates the opportunity for success. Rule number 1 says that we must have strong trigger lines. You have to have strong trigger lines because that produces the advantage of momentum. The only way you could ever have strong triggers is if you're trading with the trend. Guys, the trend is your friend. One of the easiest ways to blow out your account really quickly is to fight the trend. If the background is green, the market's going up. If the background is red, the market's going down. It doesn't mean take a trade. It means look for your rules to be met in the direction of the trend. In an uptrend, to have strong triggers, your small triggers must be above the large triggers. The large triggers must be wide, and there's space. There's space created between the two. It's that space that lets me know that the triggers are strong. In a downtrend, the small triggers are below the large triggers. There's space between the two. This is your strong trigger look, guys. And when you have a strong trigger look, the odds are favorable for the market to continue down. When you have a strong trigger look, guys, well, that's not quite the perfect one. The market is more likely to push in the direction of the trend. The market is more likely, has a higher potential to break key Fibonacci areas. Strong trigger lines even help some of you guys make exceptions and change your trading plan, because strong trigger lines, when a market is moving like this, guys, it can cover some of the mistakes that new users make. And when you have strong trigger lines, that's when you're looking at that refinement process on a smaller, faster chart. And that's when you're looking and hoping for a potential entry. And I'm going to show you this. When you see a tail form on one of these large charts, one of these bars, it's all of this retracement here. And we're going to use that to pinpoint entries, guys. So if you see a tail on a large chart, when the rules are met, know that that was a potential entry, and you can use that as a study tool to build confidence and trust in the methodology. So separation between small and large, that's your look of strength. Guys, when the small and large come back together, we call it weakness. And when we have weakness, anything can happen up or down. This is where you typically see maybe retracements from the middle of nowhere. Weak triggers are where key Fibonacci areas are more likely to stop the market, to hold the market. So as a brand new user, you have this amazing option where you can say to yourself, I am going to commit to strength. I'm going to commit to momentum. My job as a trader to have the best advantage is to look for that separation between the small and large triggers, is to insist that the momentum is strong if I'm going to take a trade, because when those small triggers work their way inside of the triggers, anything can happen up or down, and it may retrace more. But with strength, it's more likely to push down, guys. And with strength, it's more likely to push up. It's more likely to break those key areas. So I'm going to ask real quick, is everybody good with the idea that when there are strong triggers, the odds are favorable for the market to continue in the direction of the trend? This is your advantage. This is your edge. And when those triggers are weak, anything can happen. And I don't know about you, that's not very confidence inspiring. When you have momentum, guys, when that market is pushing, when the odds are favorable for it to continue in the direction of the trend, you've got to make sure that you're not trading into something that could stop that market. We call these termination conditions, and there's a recipe for defining them. But essentially, a termination condition is a horizontal line on your large chart, the big chart, the slow chart. And these lines on a large chart, guys, can create reversals. These lines on the large chart are where highs and lows are most likely to happen. And I think most importantly, and the one that really made it easier for me on termination conditions, is these lines on a large chart. These are where the large crowd are most likely to make decisions, guys. This is where buyers are most likely to buy and enter the market, where sellers are most likely to sell and enter the market, where buyers are most likely to take profits, and where the two forces are most likely to fight, guys. And one of the worst things you can do is get caught in the decision-making process between the people that have more power than you. So rule number 2 is designed to teach you a little bit of patience. And since the large crowd is making decisions at these key areas, the first step in defining a termination condition is that price reaches the area. If I'm in an uptrend and price is working towards the area, that area, I'm going to consider it a target. But once those price bars reach it, once we get to that area, that's what sets off the decision-making process. And there's a couple different things that could happen. That area could reverse the market. That area could create an untradeable bounce. It could set off a fight, or it could break. And the reality is I never know what's going to happen when the market reaches an area. So we're going to let the trigger lines tell us what we should be doing, what we should be looking for. I won't tell you. That's not my job. The trigger lines will tell you. So if price reaches resistance and the decision-making process begins, the trigger line, we're done with price. The trigger lines step in, and you're going to ask yourself, where are the triggers? So if price reaches the area, where are my triggers? Well, both small and large triggers are still below resistance. And that defines that area of resistance as a termination condition. And a termination condition may reverse the market. A termination condition may break, typically with momentum. A termination condition could set off a fight between the buyers and sellers that you don't want to be in the middle of. So if price reaches the area and the triggers remain below, it is a termination condition. And rule number 2 says you don't have a clear path, no trades into the area. If this termination condition reverses the market, makes those large triggers go from green to red, we're going to call this a strong top. And a strong top is the precursor to the highest probability trend trade you could ever take. A strong top is rule number 1 for Bob's HVA trade. A strong top is rule number 1 for Steve's momentum trade. A strong top is going to be rule number 1 for the second trade on the plan that I give you. So understand, that if the decisions made at a key area are so impactful that they reverse the market and give you rules met for your trade, that trade has the highest chance of success. Market's coming down off that strong top. If I find an entry, that blue fib is a target, it's a target, it's a target. Price reaches it. Where are my triggers? They're above support. Now it's a termination condition. And because it's a termination condition, it could break, it could reverse, there could be a fight. I don't know what it's going to be. Rule number 2 says absolutely no trades into that area. Guys, this is the most important rule I think you ever learn as a trader using this software, is understanding that the accuracy of Fibonacci is overwhelming and the market loves to stop and react right at key areas. Support holding again, support holding, resistance holding, support holding, consolidation in between two areas, rule number 3, keeping you out of that fight. And then once that fight is over and you get momentum, look at that, there's one of those tails, one of those potential entries. So understand, there it is again. It holds, it bounces. You don't have to trade into an area, guys. Nobody's making you. You're in control of whether or not you choose to. Areas break. If it doesn't reverse, if it's not a strong top or bottom, guys, areas break. And once again, the trigger lines are going to tell you whether or not it's broken, not the price bars, not the colors of the fib. An area is considered broken. Resistance is considered broken when both small triggers and large triggers get through the area, beyond the area. And once that happens, resistance actually begins to behave as support. And your path is clear. Guys, rule number 2 is now met, and your path remains clear until you reach the next area. And when you reach the next area, you're going to start that process over again. Price reached the area, where are my triggers? So this is what it looks like when resistance breaks and begins to behave as support. And right down here, this is what it looks like when support breaks and begins to behave as resistance, guys. And once again, once the small and large triggers get above or below an area, that area is considered broken. Your path is considered clear until you reach the next area. So once my small and large got above resistance, the fact that small and large green trig overlap is not good. I'm not sure what you're talking about, Todd. Can you show me a picture of what you're seeing in your brain? Are you saying, and let me make sure that I'm getting this right, small and green, where, up here? Where the trigger lines don't match colors? Down here? This is the last pick that I had. That one? Are you talking about right here? So check it out, Todd. Strong triggers, right? Odds are favorable for the market to continue. Weak triggers, anything can happen. It is neither good or bad. It just is what it is. There's a look for strength. There's a look for weakness. Your rules, if you're following the high probability trend trade rules, Todd, say that this is your look to have an edge. This is the look when your edge goes away. Does that make sense? Let's not worry about good or bad. Let's talk about rules met, rules not met. When they overlap, this is weakness. When there's separation, that is strength. And it's cool because it's almost too easy. If I don't have space between my triggers, rule number 1's not met, I choose to do nothing. If I have it, I'm going to go to rule number 2 and make sure that I don't have termination conditions. So ideally, I want strong triggers, and I want to make sure that I haven't hit an area, and that's your best of the best look, Todd. This is where the money tends to come easy. See how we're trading away from an area, the momentum is strong, there's nothing in the way. That's the golden child. That is the golden goose. And then when you get down to fibs, look at that. Not only do you have weakness, you also have an area that could stop the market. That's the account drainer. Breaking the area. There's your momentum. Probably an opportunity to get long right here, Todd. And then when you get to that red fib with weakness, what a great target. Because you can say to yourself, holy crap, my advantage is gone 2 times over. I'm just going to get paid and not care what happens next. Odds favorable, broken area, and there's your opportunity to look for it with momentum, with path. And then that opens you guys up, and I think I have to change this picture. Once you can identify, once you can identify momentum, you'll never mess up rule number 1. And once you know the difference between a termination condition and a clear path, guys, you should be able to avoid a lot of losers by not trading into areas. And that basic understanding of momentum and trigger location sets you up for the second trade on the plan. This is what we call a 50-50 look. And it's just a description of where the triggers are in relationship to the area that was reached. So if price reaches resistance right here, my triggers are below, that's a termination condition. But once my small triggers smash through that area, 50% of my triggers are above the area, 50% are below. This 50-50 look, as long as there's momentum, lets me know that that fib has the potential to break. Small triggers smash, large triggers haven't gone through. This 50-50 look, 50% through, 50% not, as long as there's momentum, lets me know that this fib has the potential to break. And does everybody see the tail on the 50-50 long? And does everybody see the tail on the 50-50 short? I'm going to give you a plan to capture trend trades with this look, but because the path isn't clear yet, guys, you're going to have to manage it just a little more assertively. You're going to have to look for change on that smaller, faster chart, telling you that even though the area has the potential, that potential may not be realized. And there's a great example of it right there. All of that momentum and the potential to break, but the market didn't break that area. These were just textbook termination conditions. That didn't have any strength to keep pushing up. There we go. Potential to break, but created a bigger bounce than we wanted. Weakness pushes back to termination. That reverses the market directly into one-to-ones, even with odds favorable momentum. See how it stops the market, creates a big ugly bounce? Pretty cool, right? You guys knew about that one-to-one for that long, 9 till, what is that, 8 at night? That's an 11-hour one-to-one. It didn't sneak up on you guys. It didn't surprise you. You knew where it was, and you knew when price reached it, it had the potential to stop the market, and it did. And then eventually, it had the potential to break, maybe an opportunity. And then weakness at a fib. There's those tails. That's the reaction at a key area. Resistance breaks, behaves as support. How cool is that? The market comes down, has the potential to break, but retraces bigger, and then it retraces down. And ladies and gentlemen, we are at the current live market. The first bar is telling me that I don't have momentum. I don't have rule number 1 met because my small triggers are up and my large triggers are down. And you can't have momentum if the triggers don't agree. So guys, give me a why if you're with me. Price reaches an area. If the triggers remain above support, below resistance, just sit on your hand and wait for the reaction. That's the easiest thing to do. I love that. Guys, there's going to be times when your path isn't clear because the areas are stacked. Maybe it's a few fibs, couple different areas, and man, this is 90% of your day. Remember that as a day trader, as somebody following a plan, proven to win more than it loses, there will be times where that plan isn't coming into fruition. There's going to be times when your rules aren't being met. And guys, that really is 90% of your day. Sitting on your hands. You're like, oh, termination, It has the potential, crap, termination. It has the potential, dang it, termination. And you start to get frustrated and angry and bored or whatever it is, and you're going to be inclined to break your rules. Well, I'm never going to get paid. I'm never going to make money. Not if there's 3 fibs in the way. And guys, that 2 to 3 minutes that this happens feels like an eternity. But I'm telling you, futures markets exchange trillions of dollars every day. The S&P futures market typically exchanges $174 million a day. If you can have momentum and a little bit of a clear path, guys, you're going to find a way to capture $400, $500, $600 a day pretty effortlessly by respecting areas, insisting on momentum, and $400 a day in a market that trades 174 million is a 6-figure income based on your trading. And the challenge for most of you is you're going to have to fight the urge to break your rules. You're going to have to resist the temptation to deviate when you get bored, when you get fearful, when it's been too long for a trade. Because successful traders do the same thing every day. Successful traders take the same trades every day. And you're learning patience. That's part of the education process, is learning the patience to do nothing. So there's one more termination condition, guys. Not on it will happen on the large chart, but you'll see it on the small chart first. And it uses that refinement process. When the large chart says down, strong, potential to break, and you're saying to yourself, I can't wait to find an entry. Everything looks great. Life is good. I'm going to go short because that area has the potential to break. And then your small chart gives you 3 divergences, 3 losses of momentum in the same range. This is the small chart giving you a heads up. It says, hey, Damien, I know you're stoked on the momentum, brother, but it's dying, and you can see it on this small chart. 3 divergences in the same price range can terminate a trend. 3 divergences can create an untradeable bounce. 3 divergences can create a reversal. 3 divergences is the only termination condition as a brand new user that I will let keep me out of a high probability trend trade if my large chart rules are met. And we've made it. We've made it through the large chart, guys. Good job, everybody. Your large chart has defined the direction of the market behind the most current bar, and it is green, and this market is going up. Your large chart has defined the momentum of the market with the strong triggers, smalls above the large, space between. Rule number 1 is met. Your large chart has defined the areas, the one where the market is likely to go with all that momentum, but it's not a termination yet because price didn't reach it. And it lets you know that you're above the previous resistance, that your path is clear. Is everyone with me? Because we're going to go define an entry based on this look, the most current bar. We're going to go to the refinement chart, the small chart, and you guys are going to have a level of accuracy that allows you to use a limit order to buy or sell a pullback at an area inside of triggers. And what that means is that you are going to pinpoint where the small crowd is most likely to fail. When the large chart is up, when the large chart has momentum, when the large chart has a clear path, we're going to let the small crowd fight, and you're going to use a limit order to buy or sell their pullback at an area, at a fib, at a mid-band, at a yellow 1-to-1. And that area is going to be inside of triggers, guys, because your large triggers on the small chart and your synthetic triggers on the small chart, they are used to define where that pullback is most likely to return, where that retracement is most likely to go, where that fight is most likely to push down. So if you let your large triggers and your synthetic triggers on your small chart overlap one on top of each other, you have what we call favorable large triggers. And favorable large triggers give you the smallest little area where the market is most likely to retrace. And fibs, mid-bands, or yellow 1-to-1s inside of those triggers, guys, give you the tiniest little window where the market is most likely to bounce and continue in the direction of the trend. So the tighter the large and synthetic are one on top of each other, guys, the higher the accuracy for the entry. In a long trade, when the rules are met, everything is going to be going up, and you're going to see these price bars and those strong triggers, and your fear of missing out is going to kick in. Full tilt boogie, guys. Your pattern for entry begins with a reversal bar. The reversal bar signals the beginning of the pullback, the beginning of the fight from the small crowd. The reversal bar is not your entry. The reversal bar says, hey, guess what? The fight is on. And you'll look for your large and synthetic triggers, and these will define where that fight is most likely to go, where that retracement is most likely to retrace, where that push down is most likely to go down. And it's most likely to go down to the lowest line of those triggers and somewhere between the top of the triggers and the bottom of the triggers. And that red box defines your retracement zone. The trigger lines are not your entry. Triggers aren't bouncy. Areas are bouncy. The same way they can create and stop the market on the large chart, we're anticipating the same reaction on the small chart. So you're going to create a window, guys. And it may be a tick wide, and it may be 5, 10, 15 ticks wide. Depends on how tight your triggers are. But from the highest area inside of triggers to the lowest area inside of triggers, guys, this blue shaded window represents the point where the market is most likely to bounce and continue in the direction of the trend. This blue shaded box shows you where the small crowd is most likely to fail, where they're most likely to lose their fight with the large crowd, and where the large crowd is most likely to take over and resume business. You're going to activate a limit order 2 ticks above that highest point of support. And you're going to say to yourself, because of the strength of the large chart, because of the clear path of the large chart, I'm going to catch this at the top of the window. Fully understanding that the market could still push to the bottom of those triggers, that the market could still push to the bottom of those areas. But once the market pushes below that low trigger line, guys, once that market breaks below, you'll never know if, when, or where the market is going to continue up. I call this the wrong side of the triggers, guys. And the wrong side of the triggers is where the advantage of rule number 3 is no longer in play. So you're going to teach yourself to ignore any lines on the wrong side of the triggers. Futures allows us to make money both directions. I love that. So when the large chart is down, when the path is clear, I'm going to wait for the reversal bar. That's the beginning of my pattern, guys. It's not my entry. It says that the fight is on. I'm going to define where the fight is most likely to go, where the retracement is most likely to happen, and that is from the lowest line of the large and synthetic to the highest line of the large and the synthetic. This red box shows me where these up bars are most likely to go up. This mid band, this area inside of those trigger lines, this is my brick wall against these price bar tennis balls. And this is where the market is most likely to bounce and continue with the trend. This is where the small crowd is most likely to lose their fight with the large crowd, and the large crowd says, nope, we said down with strength, and that's exactly what we're going to do. Anything on the wrong side of those trigger lines, anything above those trigger lines, rule number 3 is no longer in play. You no longer have an edge for entry, and you're going to learn to ignore any line beyond the retracement zone because you don't know if it's going to stop the market. And we're all about advantages, guys. We're all about an edge. So when we talk about the high probability trend trade, and we talk about learning the high probability trend trade, I'm going to encourage you newer users. Learn how to identify momentum first. Just go take pictures, learn what it looks like, commit to that advantage, and then spend some time scrolling back, defining termination conditions, making sure that you can understand them, that you can respect them, and then go through and begin to find your entry areas, guys. And once you can pinpoint that area, you know where the market is most likely to continue. You know where it's most likely to bounce. You know where your least amount of risk is coming into play. And you know where the furthest room to your potential, to your targets, is coming from. And by defining where the market is most likely to continue, guys, you have defined where the market shouldn't go. And the market shouldn't go 4 to 5 ticks beyond those trigger lines because that's where my advantage is gone. If it goes 4 to 5 ticks beyond the trigger lines, it's going to hit my initial stop, guys. I'm going to exit that trade. And I'm going to exit that trade and, I'm going to say a bad word, right? With a loser. Let's turn it into a 4-letter word. With a loss. Guys, losses aren't negatives. Losses are not bad things, guys. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. You'll never know which ones are going to win or which one's going to lose. You'll never know what the market's going to do. But what you can do is you can go back and study this pattern. You can learn this pattern. You can prove this pattern. You can back test it historically and say to yourself, if I take this pattern with momentum and path and a pullback to an area, I know that I'm going to win more than I lose. I've proven it. I know it. It's going to pull the emotions out of the trading, guys. I know exactly where the market shouldn't go if this is going to be one of those winners. And guys, it's this pattern right here. This is everything together. Strong triggers, clear path, wait for the reversal bar, activate a limit order just above support inside of triggers, let that thing run. This is how you're going to study. You're going to study this look. Let's go back to the live market. Look at those weak triggers creating a retracement. We may need to go to the S&P to find what we're looking for. Let me pull it up. Get over here. All right. So I'm going to find odds favorable momentum and at least the potential to break. Man, that market's been cranking today, hasn't it? Trying to find one that's a good example. There's a little tail right there. Remember, we're just looking for tails. I'm looking for things on a large chart that said my rules were met. And if I scroll back on my small chart, eventually you'll run into that tail. And there was such a huge run, and that one didn't get it. There was such a big 730 spike, and I'm not sure why, and it definitely disrupted the market a little bit. Let's see if we can find rules met. 90% of my day is waiting for them to happen. I believe that one was the potential to break. Let's blow it up a little bit. Does everybody see it? Odds favorable momentum, potential to break. Let's go see what that tail looks like on a smaller, faster chart. And that was right in the middle of chaotic news. And even during the chaos, 726, even during the chaos, it pulled right back to resistance inside of triggers. So that's a pretty good example. And guys, when I'm talking chaos, this is 726 in 37 seconds. This is 726 in 43 seconds. This is a 6-second, 15 to 98, 17-point run on the S&P, and right in the middle of it, your pattern was true. And right in the middle of that chaos. And Aaron, that goes back to what I was talking about. News isn't a day breaker. I mean, this is still 2637 over here. It just means that you have to pump the brakes and wait for it to become tradable. But can you guys give me a why if you see it? That's your pattern. Momentum, potential to break, pull back to an area inside of triggers, make your money, go play golf. That's what we're doing. Most current bar, guys. Price reaches, well, let's start with momentum. Trend is up because behind the first bar, it's green. Smalls are up, but large are down. The colors don't match. I don't have momentum. Rule number 1's not met. Price reaches 1-to-1s in resistance. My triggers are below. Rule number 2's not met. Do you guys see how it may be a better idea to do absolutely nothing rather than to hope that the market does something the indicators suggest it won't? Now my large triggers are starting to roll, but I'm still below resistance. So now I start playing if then. If my small triggers smash through this fib, we're watching the most current bar. If they smash through this fib, well then this fib has the potential to break. But right now, only one line of my small triggers are through. And guys, your small triggers are like a car. That's the front of the car. That's the back of the car. And those small triggers are not above the area until now, when both lines are through. And now my large triggers are up and wide, and that keeps going, and the momentum is growing. And guys, I haven't reached the next area. I have the potential to break. And if I got a pullback right now, I could define areas inside of that retracement zone. I could define Fibonacci support. I could define mid-band, yellow 1-to-1s. Guys, I have a box from the highest point of support to the lowest point of support, where if that pullback comes and this area is actually going to break, it's most likely to happen from somewhere in that box. Does that make sense, everybody? This is not a high probability trend trade setup. This is a medium probability trend trade setup. And guys, it's not coming from a strong bottom, which means if you're following the plan I'm about to give you, this trade is less likely to win because of a weak bottom. If divergence prints, if I give up momentum when this path isn't clear, it's less likely to win. So we'll leave it up there. We'll see what happens with some broken rules. Maybe we'll get lucky on one. I don't know. I'd rather do the same thing over and over and over and over and over. How do you get to where you want to be, guys? Take pictures. Take pictures. Take a lot of pictures. This is your homework this weekend, guys. Take 25 pictures each of strong triggers and of weak triggers. Annotate your chart, why they are strong, what it means to you in terms of rules, odds favorable momentum. And on the weak triggers, talk about why you don't want to get into the market with triggers where anything could happen. Do the same thing with a clear path and termination conditions. And guys, if you do this, what you're doing is you are building confidence. You're building recognition through repetition. You are knowing exactly what it looks like to take a trade, and you know exactly what it looks like when you're going to make the choice not to take a trade. So go take a lot of pictures. Get them into the spreadsheet to that basic rules. I've given you a huge head start. Learn those very basic looks. As you do it, I'm also going to give you the KISS plan, guys. And the KISS plan is, I said in the KISS plan, this is the high probability trend trade checklist. This is the checklist to enter the market. That's all we've talked about. So the best of the best is a strong top, termination that reverses the market, or a strong bottom. So for your first 20 trading days, guys, insisting on a strong top or bottom creates an advantage, more confidence. Make sure rule number 1 is met with strength and that it is not weakness. Understand whether you have a termination condition, absolutely no trade. Whether it's only the potential to break, you'd have to manage it assertively, but if you're looking for high probability trend trades, guys, it must be a clear path. Define your entry. And the second page is a principal version, guys. The second page is a high probability trend trade checklist. Print it out. And guys, I'm telling you, nobody has ever followed these rules truthfully and done worse than 70%. That's why we give it out every day. And that's why I give you this. This is the KISS plan. And the KISS plan is a stepping stone in your learning journey. And I'm going to tell the story. Fridays are good for stories. The KISS plan came to be, believe it or not. A gentleman called me one day. One of the client advisors said, "Hey, I have a client and he's got to talk to you. He's a little put out." And I said, "Let's talk." And he called me and he said, "Mark, I can't find a trade." And I love that phrase, find a trade. Guys, you're not trying to find a trade. You're trying to find an edge, and you're trying to trade when rules are met. He couldn't find a trade. And I asked him, I said, "Well, what are you looking for?" And he said, "Mark, I'm looking for that trend trade you talk about." I said, "Okay, that's a good one." He goes, "And I'm looking for that medium probability 50-50 trade you talk about." I said, "All right, that's a solid plan. We can work with this." And he goes, "And then I'm looking for an edge trade. And I'm trying to incorporate an HVA trade. And I've got 3 different momentum trades. And then, man, I'm trying to do what John Novak is doing in the room, where he takes these trades." And I said, "So you're telling me you have 8 sets of rules for entry and you can't seem to find a trade?" And he goes, "I can't." And I said, "So what if, hypothetically, putting it out there, instead of looking for 8 different trades worth of rules, we back it up a little bit and we look for the best of the best, the highest probability, the confidence builder, the high probability trend trade?" And I said, and look for the medium probability too, the 50-50 trade, and learn these looks and commit these looks to memory and learn the rules and recognize the advantages. And instead of looking for everything, look for the best." And he said, "You know what? I'm going to try it." And I mean, of course, it's a happy ending. A couple of weeks later, I get an email from the gentleman. He goes, "You know," He goes, I couldn't find a trade because I was looking for all the trades. He goes, once I started looking for the simple trades, for the easy trades, for the high probability trades, he goes, Mark, I feel like I can't lose when I follow this plan. And I've got the same similar story from a guy that just called me up and told me I was absolutely full of shit and a snake oil salesman because this plan that I'm giving you right now would never work. And guys, if you don't learn the rules, you can't follow a plan, and that was his challenge. So he started posting in the room and getting feedback and learning these rules, and he changed his life with the KISS plan. He was winning about 83-84%. And as far as I know, he's still a professional day trader, guys. So this plan is a stepping stone, but it's also a focal point. This plan is designed to optimize your chances of success with the high probability trend trade while you're learning to read your indicators. And then through simulation study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals on your experience reading the indicators. Most people won't stick to a plan long enough to make it second nature. Most of you guys will start to do it and decide that it's not exciting enough, or that you don't feel like taking those pictures or presenting in the room, and you start chasing other things. Guys, keep it focused for a little bit, because you have to know why you're going to enter a trade. You have to know, and it has to be testable, repeatable, verifiable, guys. You're entering a trade because you have an edge, because you're trading a pattern that has been proven to win more than it loses. And if you know that it wins more than it loses, then you know it loses. And you start saying to yourself, I will have to accept losers every now and then. I will have to take small losses, and it helps remove the emotion. John Novak used to tell me, I don't care if my trades win or lose. I only care about whether or not I'm consistent with the plans, because I know the plan wins more than it loses. And then you have to know why you're going to exit, guys. And your exits go back to understanding advantages, because the same way advantages get you into a trade, losing those advantages should be enough to pull you out of the trade. And that's like getting out 5 ticks beyond the trigger lines where the market shouldn't go, or exiting a trade when 3 divergences print because now it's a termination condition. And these both have to be clearly defined. And you have to be committed, like your trading life depends on it, to following this plan to give yourself the highest chance of success. So define your entries, because great entries create manageable trades, guys. Great entries set you up for success. Great entries reduce risk. Great entries maximize profit potential. Great entries are an accumulation of 3 advantages that have been proven to win more than they lose. And then once you enter that trade, pucker factor 92, guys. You've got to manage it. You've got to do something with that great entry. And the same way I create a checklist for an entry that's very mechanical, you can allow your management to be just as mechanical as you're learning to read your indicators. And that's what the KISS plan management is, guys. It is based on 2 contracts, one to get you paid and one to teach you to trust the large chart. And it's going to help you understand stop placement. And it is focused on getting money in the account, creating that confidence through success. And you will probably create your own management plan based on your experience with the indicators. But until you can do that, as I know a lot of people that take the KISS plan concepts and they're still trading them years into it. And it means that you understand that your entry is 2 ticks below resistance inside of triggers. Short trade, obviously. And your initial stop is 4 to 5 ticks beyond the triggers. This is where the market shouldn't go. You will know your risk before you ever enter a trade. You'll know exactly where your stop belongs before you ever enter a trade. In this case, it's $150 of risk per contract. And you have to be okay with that, guys, because if you're not, and I'm going to do this, we're going to do it with a picture today, and I take my stop and I decide to put it here because that's where I don't get sweaty, there is no reason to believe that the market won't hit my stop and then do everything that the indicator said it was likely to do. If that stop is still in the retracement zone, once again, I run the risk of just watching it go without me. Learn to accept risk, guys, and if you're not okay with the risk, just don't take the trade. There's nothing to do. You're either going to get stopped out or you're not. And if you're not, you're going to get a reversal bar in the direction of your trade. This reversal bar is what we call a confirmation bar. And all reversal bars are not confirmation bars. This down bar is confirming that the market is now moving in the direction of the overall trend. It is confirming that it's going that way with odds favorable momentum. It's confirming that it's going that way with a clear path. And it's confirming that it's going that way from the area inside of triggers, guys. It's only a confirmation bar if the rules are met. So if you get it, you're going to redefine where the market should not go. Your new stop is 2 ticks above that reversal bar. And you went from $150 per contract to $30 per contract. And it's not unusual or uncommon to see any of you guys take the perfect trend trade with amazing stop movement. And even though it doesn't work out, the loss is so small, you're like, whatever, next. It's just a part of doing business. So if you're not stopped out, it means they're going to your first contract, your first target, guys. And your targets are set up at $100 and $200. We're learning how to get paid, guys. So if price reaches your first target, one contract is automatically removed. Those funds go into your account. Whoops. Sorry, caught me looking. And guys, you're going to move your stop to break even. You're gonna take all of the risk off that trade. So you have been paid. The money's in your account. One contract is off. You're feeling good. Your pulse is starting to finally settle down. And now you have absolutely nothing to lose to see if that market continues with momentum, continues with the clear path. And if it does, your second target is only $200 away from your amazing entry, guys. And $200, you're out. You're done. The contract's off. You're done with the trade. You can stand up, walk away, and $300 is in your account. And there's a lot of you that say, but Mark, $300. I mean, that's not a lot, right? That's not a good trading day, is it? Guys, this is a $300 3 minutes of your life. That's 2 to 3 minutes typically. That is a fraction of your trading day. But if you shut down the factory at $300 a day, if you said, you know what? My job is to make money consistently and to prove that I can make it consistently and to make it day in and day out. And instead of hoping for all the money, I'm going to look for the easy money. At $300 a day, that's a $75,000 a year based on your trading. So I'm going to ask you guys, if you're not making 75 grand a year with your trading, why are you chasing thousands of dollars when you haven't been able to make 300 yet? Someone had this talk with me once. Why are you chasing all of the money when you haven't learned how to make it consistently, guys? Learn how to make it consistently. There's so much time to add to your plan. $400 a day is a 6-figure income. But you've got to go through this and you've got to have a plan. So I always tell you guys, I'm going to give you everything you need to be successful. I'm going to give you the trade tracking sheet again, which means that you now have the opportunity to go through and look at over 500 trades from Nexgen users using this very basic concept. No reason not to understand the entry or because it's all right here. No reason to not understand management eventually because it's all right here. Understanding what it means to have the rules met when the rules aren't met. Guys, all of that is on that spreadsheet. It's an amazing study guide. I'm also giving you this. This is the everything you need zip file. And inside of that zip file, some goodies. It's the PowerPoint that I teach with. It's the high probability trend trade checklist. It's the chart reading 101, making you a chart reader. It's the KISS plan, giving you the best of the best, highest probability trend trade. And then also that 50-50 trade when the area is not broken. It only has the potential. And that's the one where you have to know what a strong top or bottom is. And that's the one where you have to know what the momentum is. And that's the one where you have to know how to enter. And you've got to be able to recognize divergence because a loss of momentum can keep an area from breaking, guys. All this is being given to you. And then for you guys that are new and need it simple the way I do, this is everything that we've talked about in the last hour consolidated into 2 pages. That's it, 2 pages. So it tells you how I teach. It tells you what we're looking for. It reminds you that once you understand momentum and path, you have the keys to the kingdom, the golden goose. It tells you the rules. It shows you exactly where to find them, the indicators you'll be using. Guys, the advantage of momentum and how to recognize it, defining a termination condition, knowing what it looks like when it breaks, reminding you to be patient, and then how to find your entry, guys. The refinement process, the whole system getting you in, and how to study. Everything you need to be successful with the software has just been laid in your lap. The only thing that I have not given you is the seat time, the experience to build the trust, the experience to learn the looks, the time behind the mouse to make the looks easy, guys. That's going to be on you. There's one more thing that I'm going to share with you, and then we're going to take a break because my mouth is drying up. I love this one. And I'm going to tell you one thing. This little snippet that I'm introducing to you right now, guys, this little snippet is an email response to somebody that was mad as hell with me because people in the room weren't following rules. And I found that a little amusing that he had designated himself the trade police. I won't even do that. So this is what I replied, guys. The key to everything that we do is having a foundation. To understand the basics, to compound a little bit each and every day. So for you new users, if you're brand new with me, I am going to blanket you with very conservative rules. I'm going to stress the importance of being able to recognize these three advantages. I'm going to hand you a solid plan that optimizes your chances of success as you learn to read the indicators. So for you new users, or for you old users that can't seem to find success yet, no momentum is bad. Termination conditions are bad. Areas beyond trigger lines for entry are bad. And these blanket rules are put in place to help keep you safe, to increase the likelihood of success. And they're not always bad, and you'll find ways, if you choose to, through your chart reading, to make exceptions to change your plan. Just like anything, the more time you spend with it, the more you see. That's when plans change if you feel like they need to. I've never found anybody that's making 70 to 80% winners go, you know what, I just need more. You've got to learn the process that yields the results, guys. You've got to learn the execution of the method because the method has been proven. And when you can do that, the results seem to follow. And that's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, if you're okay not looking for all the trades, only the best trades, you can find an extraordinary level of success. I've watched it for the last 5 years. I've watched people get funded in accounts doing the bare minimums, that very simple KISS plan. And I've watched people spin their wheels for the better part of a half of a decade because they keep changing their plan when 2 or 3 trades don't work. So the further you deviate from simple, guys, the harder it becomes to find consistency. Question everything, and I'm gonna say that. Question everything. I encourage it. I want you to learn. But when I give the answer, I want you to take notes. I want you to grab the picture that I gave you. I want you to study it because I want you to be successful, guys, and give yourself a little bit of grace. You're new. It's okay to be new. So as we go into the second hour, we're going to look at every chart posted, and we're going to talk about momentum, path, and entry. I don't care if it is a high probability trend trade, if it's an HVA trade, if it is a momentum trade, if it's just a jump the fudge in trade, guys. We're going to talk about momentum, path, and entry. I'm going to point out the chart read. So new users can say, okay, Bob took this trade, but Mark said he traded into a termination condition. That's probably not my trade. Bob has probably done the study to take this trade. I'm going to hold you accountable for your annotations. If you tell me that you have momentum but it was weakness, I'm going to tell you that was weakness, not momentum, and we'll go back and define momentum. If you tell me you had a clear path when it was only the potential, We'll go back and repeat the rules for the 50-50, for the clear path, and make sure that you have the lessons you need to make sure that your reads are accurate so that you are taking entries when you have an advantage, when you do have an edge. Um, and we'll talk about your entries. We'll talk about your exits. Tell me the whys. That's all I ask. Tell me the whys. And the great thing is when the feedback is, holy crap, this was amazing. What a beautiful trade. You have the recipe written on your chart to repeat that trade, to make it repeatable, to make it testable, to make sure that it's something that you want to have in your plan. So I'm going to take 5 minutes. I'm gonna go stretch my legs. Um, your chart read in the S&P right now is that you do in fact have odds favorable momentum. Your path is definitively clear because small and large are below those 1-to-1s now. And if I got a retracement, if I got a reversal bar this instant, I can define, whoop, there we go. I could have defined the area inside of triggers, but I didn't. What I did is get impact with a big blue fib that is in the process of having the potential to break and potentially turning into a clear path, but now I'm beginning to lose momentum, guys. That's a live chart read. That's about how fast it happens. Crude oil says, my smalls are above my large, but everything is angled down. That's not momentum. My background is green, which is an uptrend, but my triggers are going down. That doesn't even match. I probably don't have a high probability trend trade. I definitely don't have a high probability trend trade setting up here. So I'm going to put you back on the S&P because that thing is zinging. That's fun. I will be back in about 4 or 5 minutes, guys. When I come back, we're going to start looking at charts. When we're done with your charts, we're going to go after TradingView a little bit. So you guys that are making that transition to TradingView, I want you to ask me every question you can think of. I'm going to do everything I can to answer them. And if I don't have the answers, I'm going to find them, or I'm going to show you where to find them. So I'll be back in 5, guys. Go stretch your legs, and I've got a big note that says unmute when I come back. YouTube is unmuted, so we are good. I'm going to scroll up to the top. We're going to start looking at the pictures you guys have posted. We're going to see what we can do here. Pete got us going this morning, and let's see what Pete did. Pete said, check it out, Mark. Guys, this is a look when your large chart is 30 bars in the same direction, no reversal bars, broken areas, and you see those small triggers showing the dash of the large trigger lines riding the top of it. Guys, this is what we call a strong trending market. And when you have a strong trending market, it is the assumption that you have odds favorable momentum. So what Pete has here is odds favorable momentum. His triggers get above the trouble, and he says, you know what? I'm going to ride that momentum and take it up. I'm going to get paid real quick, and then I'm going to not give it all away because I'm right at an area that could stop the market. Nice trade, Pete. And guys, this is one of the ideas where once you understand momentum and path, once you can identify those two advantages, you will find a way to capitalize. You will find a way to make money with it. You will find trades outside of the high probability trend trade that are capable of being repeatable, of being profitable. So you're just learning advantages. All right, Bob, be the man. Strong top, and then into a mid band where the large triggers are a full bar away. That's a termination, becomes a strong bottom. And then you don't have momentum, and there's into a fib, and you don't have momentum, and it's into a fib. And here you finally get momentum, and it's into 1-to-1s, and then with the potential to break that last one. It's just kind of an ugly little grind, Bob. And this is what you see in the middle of the night. This is the kind of stuff, guys, when there's no volume to push a market, the market fights. And Bob, that's exactly what you're looking at here. Reaction off termination, reaction off termination, couldn't break, reaction off termination, flat, lifeless, no momentum triggers. And I know that you guys are excited. This was 3 hours of fighting temptation to do something, and eventually it launches. And Bob, I think that the one opportunity that I see here is when you get to this point, to that final look. See where everything rolls up and it just snaps back? That's your giddy up look. That's the one, because these probably would have taken you out. So when there is that indecision, those divergences, the 50-50s, that's your continuation look. I like this. This is pretty cool. Just great study, man. Great study going through. And I didn't see an entry, which is good. All right. So when you say momentum and path, do you mean absolutely none? Because I want you to see where you're trading, and I want you to see where you're pointing out momentum. You're pointing out momentum here when you were asleep. Here we have weak triggers, and we also have no clear path. And you get in, let me blow this up, without momentum and path at the end of a giant move. You get in on the up bar after divergence from a fib. But this is where you took the trade. Entry area outside of favorable large triggers, took the trade on reversal bar. Should have taken it at the divergence on the range chart. I don't have any rules that say divergence from a range chart. So Bob, I'm going to point out what the new users are wondering. So this is your chart read. And I'm just going to do this for everybody in the room. No momentum, no clear path, no areas inside of triggers, 2 divergences, and fast on wrong side of large, Am I missing anything? And maybe this will help you guys believe in a higher power. You got paid. You got paid. You broke every rule for the high probability trend trade. All right, hold on. Hold on, Bob. You ready? I'm not done with you. All triggers trend up. All triggers up at the time of entry. All indicators up. Bob says when it 100% agrees up, he'll take a shot and manage aggressively. Is that fair, Bob? Every indicator on every chart says up. You're excited. You're like, you know what? I know this isn't my trade, so I'll force it to go in the direction of my trade. I know this isn't my trade, so when I get here, if something changes, I'm going to manage assertively. I know this isn't my trade. I'm going to get quick profits. Fair enough, right? So guys, this is a great example of how you could look at a chart and you could find everything wrong and then decide to take the trade anyway. And Bob, I'll never fault somebody for anything that they do. But here you had odds favorable momentum into a termination condition, and it stopped the market. And here you had odds favorable momentum into a termination condition, and it stopped the market. And here you had odds favorable momentum into a termination condition, and it stopped the market, and it did it again there. And it did it again up here, and it did it again right here, Bob. So guys, when I go through your charts, I won't say, damn it, Bob, what are you doing? I'll say, remember that rule number 2 is a rule, because more often than not, this is going to create a loser than a winner. And when you start forfeiting everything that you hold dear in a trade, you're going to get lucky every now and then. You're probably not going to get lucky long term. And then just second half of it, trading up, turned into a strong trend. You were able to capitalize. But once again, no clear path. And it looks like your small chart had a fighting chance. And your range chart's starting to show momentum. So you had a much better chance. So I want you to see, trade directly into the area. It's difficult. Trading from the area. Not a whole lot to create bounces. Good lesson there. Weak top, odds favorable, 50-50, no divergence, and you ride that momentum off the mid band down to the mid band. Nice trade. And I like this. Nice HVA setup, but a weak top. You chose not to take the trade. Nice job, Bob. I like that one. Everything's going your direction, and you had the potential to break. Those end quickly. Those typically go to targets quickly if it's going to win. And then bad top, mid band's likely to hold. You try the next short with 2 divergences against a 50-50. And then you got mad at it, so you just went long. Enter when price cleared the mid band, trigger roll, cleared on a fib in a chart. I don't know what that means, Bob. Is that your new trade in your plan? Cool. So this is your continuation trade. Right on. You let market flow agree before you take the entry. You let odds favorable momentum before you take the entry. I like it. Great patience on going the other direction. It fights the large chart. You let the small chart show the change you needed to feel comfortable with it. Nice one, Bob. That looks like a well thought out entry. All right. Gary says this is a good bottom at termination condition with divergence. I agree 100%. I don't see a trade in here, which is okay. I see 3 divergences in the same price range. I see a termination. I see odds favorable directly into another termination. So just kind of a maybe nothing to do there, look. All right, the Joel Show. I like it when you guys give me 6 in a row. 1, 2, 3, 4, 5, 6. Let's see what we have, Joel. Weak triggers roll to test the mid band. So weak triggers, anything can happen. And Joel, you don't just bank on the anything can happen. What you do is you say, let my small chart show me the change that I need. And because of these weak triggers, because of this weak top, very often they go to a mid band. So once my small chart has momentum in the direction of my trade, I can find an opportunity to capitalize right down to trouble. I like the way you did that. Great patience letting the small chart show change when the large chart says you shouldn't even think about a short. And then you get to the termination condition, pivot stop out. Now it's a strong, has a potential to be a strong top, and there's no momentum against your trade. And man, you get in, sold the pullback to the small triggers, and down it goes. Great trades, Joel. Nicely done. Nicely done. And that trade right there, that little snapback to the smalls, Nexgen started teaching that in 2004, and you did it beautifully. And then everything is down with momentum, nothing in the way, and you're like, let's go with it. How easy. How easy. So it pulls back, and when it heads down, you take your entry. You let the buyers fail against all this momentum, catch it on the way down, and just rock star. And then weak triggers down here. Everything is trying to push up. And Joel says, man, my large triggers are still down. My small triggers, everything's below these 1-to-1s. And I'm at a mid band with the large triggers a full bar away. That's my confirmation that the market's likely to go down, and you do it wonderfully. And then when it hits the termination and begins to roll, you let your small chart show you the change and off the other direction. And what an absolutely gorgeous dance you are creating on these two charts. Everything says up. You haven't reached the mid band. Small chart confirms it. You get in with the reversal bar, and absolutely beautiful again. Joel, I'm going to ask, does it feel pretty stress-free the way you're doing this? It looks like it would be. It looks like these are solid. So there's your termination. I love it. And you don't just jump in, not with everything up. You say, let me get some change. And look, and then down it goes. Large triggers roll, pinch, right at the area, great entry, and write it down. And I like the quick profits because this is still screaming up. And just what a beautiful little snippet in between the two. Joel, I need a mistake from you here, man. Come on. There's your last one. And then coming up, you go long. Hold it. Nope. Wait. There's your first long. Everything says up. You take the reversal bar. I see quick profits and just a small loss. On the second. And then it comes back, retests everything. Did you go short? Is that a short trade? Yeah, you tried to go short. So you fought the large chart. There's our mistake. Nothing about the large chart said down, and your down didn't work. But can I celebrate the recovery? You said, whoops, my bad. Let me get back to business, going with the large chart. Awesome. I should have read your annotations. Triggers down, hoping I will make it to targets. It was just a bad trade. Went back there to buy the reversal bar to the targets. And Joel, the difference between a novice and an expert is reaction time. It's the time it takes to recover from a mistake, and you did it awesome. That is, I would call that a mistake all day, and I would say that it didn't shake you a bit and you got right back in the saddle. Joel, great trading. Thank you for showing those. Your plan, dude, your plan is coming together. Solid. That it is such a different look at your charts than it was 2 weeks ago. It really is. And I love seeing it. Price pulls back to the large trigger. Price pulls through the large trigger. Price gets to the wrong side of the large trigger. Oh, the trade was here. Termination rolls momentum directly into a termination condition. Does everybody see that? This is where we're trading, right here. Smack dab into a termination condition. And Cav says, I want you guys to learn something about chart reads. When a Fibonacci area reverses the market, it's an advantage. When I have momentum, it's an advantage. When I have a virtually no risk area inside of favorable large triggers, it's an advantage. Trading into a termination condition, my friends, is a disadvantage. I recognize this disadvantage, but I accept it. I choose to take my low risk entry, and I'm going to get paid before I ever reach that area that could be a problem. Cav, this is an awesome, awesome execution of taking advantages, recognizing a disadvantage, and being willing to get paid quickly because it's not perfect. Nicely done, Cav. Termination conditions again, this time with divergence. Quick profits. But momentum is the factor. Strong bottom is the factor. Low risk entry is the factor. Willing to make exceptions to your plan because of the advantages you see. Momentum again, weak top. I'm trying to see where you get in. 67. You get in somewhere up here because those large triggers are still up. And Cav, I can't for the life of me understand why you took this trade. Just jumped in with momentum, hoping that it would carry you, and it did. Small chart momentum trade. Nicely done, Cav. All right, Steve, let's take a look, brother. So, Steve, one thing that you've gotten away from. What are your rules? What's it take to get you into a trade? I've noticed that you love to put odds favorable momentum a lot, which is cool. Strong bottom, odds favorable, potential to break, and you just jump in, and it works out. And then your second one, slowing triggers, and you just jump in, and you sit through the retracement, and you get out. So trading with the trend. And then here, directly into a mid-band, large triggers are a full bar away. You just jump in. You hold through the retracement. You hold through a second retracement. Nope, you get out. And then you enter short. And then you get out. And then you go long. And you get stopped out. And then you go long. And you make it to the fib. Close the gap trade. Right on. Should have been here for 4 ticks. Another try to close the gap. And you're only 4 ticks from the gap. So one of the things I'm going to encourage you guys to do in this room is write your rules on a trade. Even if you have to go back and break them down individually. And I say that and because this trade is different from this trade. And this trade is different than this trade. And really this trade has a completely different look than any of the other trades. So what I'm looking at here is no less than 4 different entries. And remember, the goal is consistency. So when the large chart says down, when the large chart small triggers are down, and you hit a mid-band, is jumping in with the large triggers still down and the small triggers inside of them the best entry? Is this the one that wins more than it loses? Or is that one the one? This may be reversal bar off the area, smalls above the large triggers roll, proving that this is actually probably more likely to hold, even though it's coming from a strong top, which decreases the likelihood. So guys, get into the habit. Write your rules. Write your rules on the chart. I think you'll be surprised at what you write. I think that when you start writing your rules on the chart, you'll be surprised at how often you change your plan. One of the things that John had me do a long time ago is when I was going to enter a trade, hit record on Snagit, or hit record on Camtasia, or hit record on Capture, and talk yourself through why you're going to do that trade. You'll be amazed at some of the stuff you say. And for me, it was hilarious because I would lie to myself in the middle of a trade. I would tell myself I had an advantage that wasn't there. Gary, I don't have any idea what I'm looking at. Using the mid-band as a skip rope, not tradable. Yellow is 1 minute opening range. Okay. There we go. So now everything says down. And it looks like you went long. And it didn't work. But then there's a short. Or maybe that's profit targets. I don't know. 2 quick pullbacks to the mid-band, trading 1 lot. So Gary, I see fibs on the first one. Potential to break on the second one. Directly into a fib on the third one. I know that it's too short, Gary, right? Like I can look at that and say, oh look, he went short, he went short. What I can't tell is why. What made you go short, Gary? What inspired you to go short? Because this short looks like it's right into a fib. And this short looks like you cleared the fib, which I like. That's a nice one, right? This one looks like a pullback. This one almost looks like a trend trade. But over here it looks like it's into it. And I'm not busting your chops. But there's just not. Everything says down and you went down with it. And I want to be able to give you more than that. I want to be able to give you more than, Gary, everything was going down and you went down with it. Which, I'm not going to lie, it's kick-ass. You're trading with the direction. All the triggers are down. You've got a lot going on your chart. Why did you get in here and not at the mid-band, right? Why did you get in? I'm not even sure where it is here. Did you take this one at the pullback inside of triggers? I love that. That's a great looking trade and just beautiful profits. The second one I get. This one I don't understand. That's why I ask. That's why I ask. Weak top. Can't believe I traded right into this 1-to-1. What's wrong with me and this divergence? You had strong triggers. It had the potential to break, Andy. And you took a pullback to your mid-band. That's why you did it. You had strong triggers and the potential to break, and you took a shot with all that momentum. And it paid dividends. Does that make you feel better about it? You had odds favorable momentum. It did have the potential to break. You took a short, trying to go with that momentum from an area most likely to create a bounce. Sometimes we get in beat ourselves up mode. Sometimes we get so focused on following the rules that we beat the ever-loving crap out of ourselves if we think that we broke them. Okay. It's a 50-50. It's potential to break. It's all the momentum in the world. And this week top, man, it's done. It's that week top pays dividends like right here. You're already past that. So that's why I say let's slow down and let's change. I can't believe I traded into a 1-to-1. What's wrong with me? How about if we do this? Every chart. Did you have strong triggers? What do you think? Yes. Did you have a clear path? No. Dot, dot, dot. It's a 50-50, and with that momentum, it certainly has the potential to break these areas. If I choose to go short, I'll keep my management hat on in case the small chart shows some change. So what you do, Andy, is you go from beating the shit out of yourself. Oh my gosh, what's wrong with me? I suck. Why would I do this? But if you just take a second and go back to your rules, go back to your chart read, go back to your advantages, suddenly it's not nearly as bad as you thought it was. Okay. So, Andy, if the market is moving so fast that you can't make good chart read decisions, is that a market you feel like you should be trading? If the market's moving so fast, you don't think you can get your stops in the right place, do your analysis in a timely fashion, get your targets where they need to be, is anyone making you trade the NASDAQ? And man, Andy, I'm a pretty good chart reader. I don't touch the NASDAQ at open. From open till noon Eastern, you couldn't pay me to trade the NASDAQ. It's too fast. I can't make good decisions. I can't move my stops. I can't get my targets in the right place. 1019, 1020, 1020. Dude, this market is screaming down. 1020, 1020, 04, 08, 08, 09, 11. This is 11 seconds. I'm not that good. So something to think about. There's a lot of people in this room that wanted to trade NASDAQ because they saw me trading it, because they saw John Novak trading it, because they saw Safia trading it, right? NASDAQ is awesome, guys. I love NASDAQ. It's all I trade. But if it's moving too fast, and Andy, I'm not saying that it's always moving too fast, but if it's moving too fast in that moment, you're like, shit, I can't make a decision, then the safest decision for most people, I don't give trading advice, is to do nothing until you have that clarity to make sure that you have an edge. Does that make sense? I told you guys I was in the pulpit today. On this trade, if you placed a trade, would or should we let the trade continue or stop when 1-to-1 show? Aaron, first of all, there's no we, right? There's no we in trading. It's all you, brother. So you have to go back to exactly what I just told Andy. Are your rules met? Are your rules met? Do you have momentum? Does it have the potential to break? Can you define an entry? That's the only reason to ever get into a trade. And if your rules aren't met, you have to say, I just choose not to. It's not my money. And Andy, if you don't even notice 1-to-1s that have been there for 3 minutes, or divergence that's been there for the better part of an hour probably, it's okay, man. Walk away. Because Andy, I know that you don't have to make all the money before 9 a.m. Aaron, did that answer make sense? On this trade, if he placed a trade, he's defining these 1-to-1s as the trouble spot, which means when the market gets back to the 200 zone right here, look at his exit. If I placed a trade at the first, can I trade? No, those little gaps in the one-to-ones don't let you go through them. Let me take the picture. The small triggers, whoops, wrong one. The small triggers are through the area, Aaron, and the large triggers are not. And what we have here is what we call a 50-50 look. And that 50-50 look shows the potential, because of momentum, for those one-to-ones to break. So what does that mean? That means that these one-to-ones are being defined as my potential trouble because they're not broken yet. Are you with me so far? So when he enters, when he chooses to enter, once the market gets back here, Aaron, once it gets down to those one-to-ones, Andy's going to say, if my small chart shows these may hold, and that might be divergence or whatever, I'll exit because maybe that potential is not going to be met. And he could also say, if the small chart doesn't show any indication that these aren't going to stop it, if the small chart doesn't show any indication that these one-to-ones aren't going to break, and you can see that the small chart gave no indication, no bounce, no spike, nothing. Everything was perfect. Aaron, that's when you might say, okay, I'm going to go break even. I'm going to protect myself into what is considered a trouble spot. But because of the momentum, because now we're starting to work through it, I'm going to see what this trade does. Does that make sense? So when you identify trouble, just be willing to manage at it if something changes. And if nothing changes, hell, enjoy the ride. Good question. Thank you for that. Those jagged are the 55? These jagged? Okay. So that's just another advantage, isn't it? You have an even higher time frame screaming down. Don't be so quick to beat yourself up, guys. Let your analysis, leave your emotions on the sidelines. And instead of this annotation, write your rules on there. And if you get in the habit of writing your rules, you're going to talk yourself out of a lot of ledges. You're going to talk yourself out of a lot of woe and heartache. And what is wrong with me? Andy, I got a Sunday school teacher real quick. This is so counterproductive. Guys, beating yourself up. You have to talk to yourself like you're a kindergartner learning how to paste and cut. And you would never yell. You would never yell at a child learning something new. You're awesome, dude. You are awesome. I've been watching you trade for a long time. Joel, you know, Boaz used to be the most boring trader out there, Joel. I think it's about to be you. Very strong, nothing in the way, odds favorable momentum, and you just JTFI. What does sold the pullback to targets mean? Joel, you write this a lot. Sold the pullback to targets. So there really wasn't much of a pullback. Are you saying that you let a tail start to form and then when it goes down, you get in and then carried it to targets? Okay, so you're saying, and I just want to make sure because this, sometimes I'm like, oh, I'm not sure. When you say sold the pullback, you're letting that little fight happen, and when it fails, you're taking your entry, and then to targets means that it hit both of your targets. Yes? I'm with you. It takes me a second sometimes. I'm a man. I don't communicate well. That makes sense. So guys, that little tail is that little fight, right? And they lost the fight and headed down, and Joel said, I'm going with the big chart. I love that. And this is what I really love, is you said, I'm not trading into this nonsense. I'm not going to trade into this nonsense. I'm going to get below the nonsense with odds favorable momentum. Absolutely gorgeous. Absolutely gorgeous. Nicely done, Joel. Man, and that's the end of the pictures. Good stuff. So, watch this. I think we could say, guys, without question, tell me if I'm wrong. When we witnessed charts where traders, no matter who they were trading with momentum, they were more likely to win. Does everybody believe that? Is that a fair statement? When I have momentum on my side, I'm more likely to win. Cab traded in determination conditions with momentum on his side. He won those trades. Andy thought he screwed up. He had momentum on his side. He won those trades. Joel fought momentum once, didn't work out, traded with it the other 17 times and won them all. So, guys, I think it's safe to say that understanding momentum may pay dividends. And then we can go even further. When the path was clear, when there was nothing in the way to stop a market, can we agree that with all that momentum, it's more likely to go down than up? With all that momentum, it's going to be difficult to stop. With all that momentum, you can find a way to capitalize? The answer is a resounding yes. And guys, I want you to really accept this, that when I have momentum and path, the odds of me winning go up dramatically. When I forfeit one of these advantages, the market is more likely to take my money. Strong triggers up. You get in on the reversal bar and get paid. Strong triggers still up. You get in on the reversal bar and get paid. And great recognition here at some trouble, mid bands. And then when it bounces back to the area and your triggers are all still up, you get in with a reversal bar and you get paid. So Joel, you're telling me that you got paid in the exact same freaking area 3 times because the large chart had momentum and the potential to break? Sorry guys, this class has just gotten ridiculous. I can't even do this anymore. There's no way. There is no way. My mouse is going nuts right now. Momentum. My mouse is drunk. I have built a career on teaching momentum and path, guys, and then understanding that you guys are going to find a way with it. If you're struggling, if you're not consistent, if you're over trading, if you're not reaching your goals, consider 5 days on the KISS plan. And guys, one of the things that you're going to learn, and this is kind of fun because I failed this test the first time I gave it to myself. I want you to know this. When people come to me and they're having challenges, I say, give me 5 days on the KISS plan. That's it. 5 days of rules adherence. And what 99% of the world realizes is that it's not their plan. It's not the market that they're trading. It's not even the speed of the market. It's their inability to follow rules, to follow a plan. And that's what's costing them money. When I was a personal trainer a long time ago, people would tell me, my diet's amazing, Mark. I don't know why I'm fat. Must be my hormones. And I would say, okay, I'm sure it's the hormones. There's no doubt in my mind it's the hormones. But do me a favor. Take a picture of everything that goes in your mouth for the next 24 hours. Everything that you take a drink of, everything that goes in your mouth that you eat. Do me a favor and take a picture of it and just send it to me right before you eat it. Guys, 99% of my clients whose fault it was not that they were gaining weight stopped sending me pictures by about 10 a.m. Because what they were realizing is that they were waking up and they were eating their kids' leftover sugared cereal and the last of the fruit roll-up that they didn't finish. And they were eating big, ugly breakfasts that weren't at all healthy. And they were adding things to it. And they were drinking heavily on the weekends. And what it was is that it wasn't that abs were unobtainable. It's that they weren't doing the work to get abs. Guys, it's not that profits aren't obtainable. It's that you may not be doing the work it takes to get profits. And that's where posting in the room and telling me why pays huge dividends. Tell me why you're doing what you're doing, what you see, what compels you to enter the market. And guys, if you can't seem to get your poop in a group, the KISS plan, I challenge you, triple dog dare you, Monday through Friday next week, trade the KISS plan and tell me how your results are. If you don't want to tell anybody that you're doing it, if you don't want to post in the room that you're going to do it, send me a message and say, Mark, I think you're full of beans. I'm going to do this KISS plan challenge for 5 days. And there's absolutely no way it's going to work. And then guys, every post in the room, show me your plan. Track it in a spreadsheet. And I'm confident. I'm comfortable. If this were my company, I'd give a money back guarantee. I would say, you know what? If you can follow the KISS plan with my software, do it for 6 months, you won't want a money back guarantee. I don't know. I'm trying to Tommy Boy it here. So, all right, there's my pulpit again. I apologize, guys. I will be back in just a couple minutes. Joel, I'm going to look at yours one more time. Odds favorable, momentum, clear path, and you do it again. Nicely done. Is this happening live? Very nice. It's a big chart still screaming up. Triple exclamation point. I love it. All right, guys, when I come back, I'm going to start going after TradingView a little bit. So if you have TradingView questions, let me know. Andy, momentum on 3 charts, 50-50, in, out at trouble, ignoring this divergence because the train pushing 5 or 6 seconds later, target met. Doesn't that feel better? Doesn't that feel better though, Andy? Because you went from what the hell am I doing to, hey, I'm kind of a badass. I love that. And can I tell you that I love that you took the time to go do that. I'm feeling like a hippie today, guys. I love that you took the time to go back and rethink the words that you put on that chart, because now you're writing a recipe for success instead of creating a recipe for self-loathing. So that S&P's screaming, guys. Odds favorable, clear path. What do you think? Are they going to give us a pullback to areas inside of triggers? They did right here. That would have been a nice one. They did right here. That might have been a nice one. Did I miss it because I missed the best two? Man, look at that fib hold. Amazing. I suck at taking breaks because you guys get in and get me all excited about this stuff. Weak bottom, odds favorable, jump in, jump out for 5 ticks, and then with all that momentum and path, you take the entry 2 ticks above. Easy money, Bob. There's that damn momentum and path again. Eventually, you guys are going to believe it. Eventually, you guys are going to believe it to the point to where you refuse to trade without it. Okay, for real. I'll be back in 5 minutes. Go stretch your legs, guys. right, we're unmuted. You guys remember that old show, The Facts of Life? When I have strong triggers, when I have no termination conditions, when I buy a pullback at an area inside of favorable large triggers. Whoops, there we go. Pullback to an area inside of triggers. Guys, did I miss anything on this one? And this is the bar that we were looking at. Did I miss anything? I had strong triggers, right? I had the first advantage that I look for, the one that's so important to me, the one that pushes a market, right? And I had a clear path. There was nothing in the way, nothing to stop that market. And the most beautiful entry I could ever define, right? You take the good, you take the bad, you take them both, and there you have the facts of life. And Morgan's right. This is a cost of doing business. And if you haven't taken the time to study this, then you don't believe that 70 to 80% of the time you're going to find success. And 20 to 30% of the time you're going to take a loser. And this wasn't a big loser. It's at the very bottom of the retracement zone. But here's the challenge, is now, next time I see this, I might skip the trade. Next time I see this look, I might not take that perfect entry and make my $300. And then I'll be like, oh no, I should have taken that one. And then I take the next one and it's a loser. And I'm like, son of a bitch, I'm only picking the losers. Guys, you can't pick your trades. You follow your rules, you follow your plan. And you leave the emotion someplace else because you have to be consistent. What's up, Lenny G? Odds favorable, potential to break. You entered on the way up and then used a trailing stop to lock in 8 ticks. Not mad at you. Nice job. So Lenny, I'm going to ask, why no entry at the area at the triggers? Waiting for confirmation? Cool. And how did you pick 8 ticks? Everything says they're going to the fib, most likely, doesn't it? And Lenny, you took a winner, and it's beautiful. And now I would go back. It's okay. You didn't. You exited when you were comfortable exiting. And that's $80. Which that's $160, dude. That's not a bad trade. So what you have to do with these, Lenny, is I want you to go back and I want you to take the after picture. And if the market did this and railed up through, I just want you to take a second and I want you to annotate the chart. And I want you to say, with strong triggers on all charts, 8 ticks on my first contract to make you feel good, to get you comfortable. I'll hold the second contract for the fib. Maybe go break even. Because what you're doing, Lenny, is you're going to start developing a trading plan. And you're going to start developing habits. And one of the beauties of 2 contracts is take one off, let one run. Develop a little bit of trust in that large chart. Great trade, dude. Nice job. Did that make sense? I hope so. All right, guys. I'm going to pull up TradingView. And we're going to start talking about it. I did drop the TradingView plan in the room. Guys, it is the plan that John Novak and I have been working on for months and months and months. And I'm going to open it up. And I'm going to pull TradingView up. And one of the things that you're going to notice... Yeah, Bob, you're the king of that. How do you let go of only one contract when you start with 2? So, Lenny, See how yours says 10 stop, 20 target? Your ATM strategy? Do this. And you probably have these from Nexgen already. Well, I got rid of mine. What you can do is under ATM strategy, go to custom. And you're trading 2 contracts, right, Lenny? So what you're going to do is you're going to add a second target, and you're going to put 1 contract on each target. And what's your stop loss? 10 ticks? So keep 10 ticks consistent. And maybe you take your first one off at 8. That's Lenny's feel-good target, right? Maybe I'll do that one at 16. Maybe I'll give it a little room to run, time to move it if everything is screaming in the direction. And then what you're going to do is you're just going to hit, and let me take the picture for you so you have this. Drop that in the room for you. And you're just going to save it as a template, Lenny. So you're going to click on Save as a Template, and you're going to call it Lenny's Moneymaker. Which the ladies would say that's your gorgeous face, but in trading, we're going to say that's the one you're going to do it. So now what it's going to do is when you enter the market, it's going to give you the stops in the same spot, but it's going to split those targets so that you can take profits on one and still have one working. All right, guys, trading view. Everybody knows the funding company is on the brink of launch. And one of the things is you can't use NinjaTrader to take advantage of the funding company. So John and I have been working tirelessly on TradingView for the last 6 months. And I'm going to skip this first whole part, and I'm going to get him to get rid of that. And what we're doing is John has created workspaces for you to put on TradingView. And your workspaces are going to look 2 charts, but they use minute charts as opposed to Renko charts. And this is what Nexgen was using 20 years ago. And there's going to be NASDAQ, and there is going to be the S&P, and there's going to be crude oil, and you're going to have access to gold. And there's where I'm rooting for Ethereum or XRP to keep going up. And all of these are pre-made for you. And guys, if you're a lifetime owner, you get these for free. John's not going to charge you guys for these. So you will get the Nexgen indicator package for free. And that's going to be, let me show you what it's going to be. What's in that indicator package? Bum, 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 bum. Cav, you won't. And let me show you why. I mean, you will. You'll have to learn the trading view patterns. But let me show you something, Cav. And I think you've jumped ship before I've gone through this every day. So I want you to see something. Cav, these are trigger lines, smalls and large. Trend is up, trend is down. Pretty familiar, right? This is divergence, high and low. It means there was a loss of momentum at a pivot, Cav. These are yellow 1-to-1s. These are pink 1-to-1s. They're just 100% Fibonacci alternates. They can be used as targets, termination conditions, or even areas to enter the market. Outer bands might be new to you, but an outer band is just a mid band and an extreme. So you're going to have the mid band, you're used to that one. And the outer bands are just kind of exhaustion points, and you can see how the market bounces off of them sometimes. And this is the new one, Cav, zones, because we can't get Fibonacci onto TradingView. So there are zones available, and there's one company called Chart Prime. It's $67 a month, I think. And these zones are supply and demand. They're supply and demand zones, and they work very much like fibs. Some of you guys will even draw them in yourself if you're comfortable with that. And yeah, Gary can draw his own. But you can see a zone can stop a market the same way a fib can stop a market. A zone can create a bottom the same way a fib can create a bottom. A zone probably shouldn't be traded into the same way a fib shouldn't be traded into. So if you are on TradingView and you don't want to pay for you don't want to pay $67 for supply and demand, there is a free version, and I'm going to show you the picture. All you have to do is type it in the little bar, in the search bar. It's very much just like the fibs. It's dynamic supply and demand, algo alpha. Guys, this is a free version of supply and demand. John Novak has gone through and tested every one of them. That's his favorite in the free version. But it's just going to show you spots where the markets may bounce, where bottoms can happen, where tops can happen. So Cav, nothing really new yet, right? You have areas, you have triggers. One thing that if you have the premium version of TradingView is you can run market flow, and the market flow indicators are a part of that bunch, guys. And market flows give you HVA lines, pink ones that come from highs and green ones that come from lows. And in the trading plan is a way to capture. Yeah, Cav, I know. I was too. I started with Renko bars. It took me, I would say, a week to start getting comfortable with the minute bars. And the reason the transition is so quick, Cav, is because you understand all the moving parts. All the Renko bars are is a description of price, is a representation of price. The minute bars are the same way. The triggers are still the same. You don't fight them. And you're going to get the market flow with highs and lows and a plan to trade it. And then the workspace complete looks like this. And Cav, it's a 15-minute and a 1-minute. So large chart, small chart. And it's a little different. That's okay, dude. I'm here to teach it. I'm here to teach it, Cav. You're looking for all the reasons to not dig it and not the reasons to love it. I will teach market flow. I will teach the HVA trade. And you know what the easiest thing, the best lesson, is that if these 1-minute triggers are against you, don't fight them. Cav, or if you're thinking about a long trade, don't fight the triggers. If you're thinking about a short trade, don't fight the triggers. That's the best lesson I could ever give you on market flow. And then once you get that, I'm going to teach you ways trading from zones at HVA lines. And Cav, watch this. You're going to get this day one without understanding market flow because you're a momentum trader and you understand momentum. And I'm going to try and make this as big as I can. Cav, can you tell that the triggers are strong? And I think you'll dig this. Awesome. Do you see how it pulled back to that pink HVA line and then continued down with all that momentum? That's your momentum trade, brother. Big honking pink line with momentum. Sell that mofo. That's one of the trades. Cav, there's no doubt in my mind you're going to rock this trade because it goes with the way your brain thinks, riding that momentum. Pretty cool. So trust me when I say everything that I put into teaching in the mornings, I'm going to put into teaching you guys TradingView and following this plan. I don't recommend anything, Gary, and I certainly don't recommend people trade like John Novak. Guys, one of the most detrimental things you could ever do to your success is trying to trade like somebody else and not trading your plan. It depends on the trade, Gary. It depends on the trade. If it's an HVA trade, it's virtually nothing. I find that the risk is less. That the risk is less on a minute chart than it is on a Renko chart. But it depends on the trade. It depends on what I'm doing, where I'm getting in. If I'm taking this trend trade right here, my entry is probably at 08. My stop is probably 12. 4 or 5 ticks. I think it's a lot less risk on the minute charts. It just takes a minute to learn how to read them. So guys, don't try to find all the stuff. Find the best stuff when we do it. There's your workspace complete. And then guys, activating limit orders and stuff, you can buy or sell. Click of a button. This is buy now, sell now. You can click on the chart and you can put in a limit order the same way you do on NinjaTrader. I mean, it's a little different mechanics, but it's the same idea. You can take partials. And then Cav, here's your first lesson. And guys, this is kind of how we're going to do it. So in the morning, I go through core advantages and I talk about advantages and piecing them together for a trade. So the concept of momentum. And guys, these are minute charts, okay? Brace yourself. Small triggers up and above the large triggers. Large triggers are widening. You guys may notice that this is the 100% exact verbiage that we use on the Renko bars. Momentum has nothing to do with those bars, guys. It's a separation of the triggers, small and large. So if you learned rule number 1 on NinjaTrader, you know rule number 1. You know how to identify momentum on a minute bar. And then areas. Supply and demand zones. I want you to think of them as fibs if they're new to you, and that'll take some of the stink out of it. If price hits a zone, it's okay to not trade into it. If price hits a zone, it's okay. Guys, these are going to be great targets where the market's likely to go. These are great termination conditions where the market is likely to stop. It's the exact same concept. So we're going to respect zones as we do fibs. Cav, there's pivot stop outs because we have divergence written in, the same as NinjaTrader. So if price reaches a divergence low, guess what? Don't trade into it. If it creates a pivot stop out, definitely don't go short. One-to-ones are powerful. One-to-ones printed inside of a zone is even more powerful. You guys ever see that top where you have like a fib and yellow one-to-ones in the same spot? And you're like, there's no way I'm trading into this thing. Same thing, guys. Pivot stop outs. Large chart says up, but the small chart is a termination. Same thing. You're going to use 2 charts to create an edge, to have an advantage, to have a trade that's been proven to win more than you lose. Absolutely you do, Gary. There is market replay on TradingView. Guys, there are 60 million users on TradingView. Better Dad, you have access to everything right now. There are no days back, Steve. There are no days back. When you add your zone indicator, you'll have zones. They're based on supply and demand, tops and bottoms, Collie. They're based on tops and bottoms that have happened previously. And it makes a chart so you don't have to think. So there's no days back, Steve. It just builds. It just builds. You don't have to set anything up. You don't have to put indicator things. Supply and demands, I don't have the inside workings of what it is. But essentially, Collie, supply and demand. Are you familiar with supply and demand? Cool. So you know that supply and demand is just based on what the market has already done. When this area holds, creates higher highs, you can identify that higher high pivot as an area of interest, and it carries it across. And then areas that have held the market previously are areas of interest, and it prints them. And I don't know the math behind it, but I do know that they're very powerful. No, so better dad, give me a second and we'll go through it for you real quick. I don't know. They're built on each chart individually, Collie, which is why they're going to be different on each chart. So you're going to have supply and demand for a 1 minute chart, and you're going to have supply and demand for a 15-minute chart, and you're going to have to look at two charts. That's the power. Is you might say, okay, I've got a clear path here, but I've got an area that could create a bounce over here, and you'll learn to put those together to create that advantage a little bit. Does that make sense? I hope that made sense. Cool, awesome. You have a daily in 15. John, don't come in here disrupting. Gee whiz for crypto. I like it. So, all right, better dad. Instructions. Do you have TradingView, better dad? No sense at all. None. Cool. So here's what you're going to do. You're going to follow instructions. I hate this. So you've got this. You've got your, okay, Nexgen software services, main website. John, do they just need to activate this but not subscribe? So you're going to get this for free. John, that's the question I have. To get the indicators, or just send your TradingView ID to Jason? All right, so better dad, you are lifetime. So just message Jason your TradingView ID, and what he'll do is he'll get you access to these. And you'll be able to go through, and once you do that, once he gives you the access, Trading Dad, you'll be able to come here, and maybe it's on this one. I'll give you the link in the room. There we go. Once he gives you the access, once he opens it up for you, you'll be able to click on the chart and it'll open it in your TradingView in view only mode. And then what you can do is click copy. And once I click copy, it's not going to let me because I'm not signed in here. Once I click copy, it's going to come over here and I'll have that ES futures here, and I'll be able to open it up, and you'll have all of those indicators with the exception of supply and demand on there. You will not have supply and demand on there. So you'll either have to go and purchase Chart Prime if you want to do that, or I dropped the picture in the room, get that Algo Alpha, which is a really nice one. So get your username to Jason. That's the first step. Awesome. And then guys, I'm going to be here to help walk you through these trades. Prior higher, thank you, John. Let me see where we're at. Currently have Top Step Combine. Assume cannot use that TradingView until I switch to John's prop firm. You can use TradingView, but I don't know that you can use it with Top Step's Combine. Run an extra chart for a while. Hope you don't crash. You can do what you want. I've never seen TradingView crash. And that's it, Gary. Perfect. And then John doesn't care for the Algo Alpha on small charts. He likes it on biggers. Yeah, Chart Prime is what I'm using right now. Better Dad, so you can see it on NASDAQ here. I mean, it's solid. I think it's $67 a month, Steve Diego. And then guys, when we talk about what we're doing, I'm going to get back to this. 3 divergences in the same price range is still a termination condition. And then guys, we're going to go through it. We're going to go through it like this. The same way we teach the high probability trend trade, guys. We've got a high volume area trade. Create a checklist. Zone reached on the 15-minute chart. 1 minute small triggers are below the large. Buy or sell a pullback to the HVA line. So everything starts, reach a zone, right? The same way if you take the Nexgen HVA trade. Termination condition starts the process. Let me get my pew pew here. Pew pew. Small triggers must get below the large to take the trade. And then there's that pink line again. You're going to sell it. And guys, Nexgen has been teaching this since golly, the whole time. Areas hold, triggers roll, sell, right? Because they're powerful. And that's the HVA trade, guys. And the other thing that I put in the room for you and dropped in there was the TV Trade Journal. And I'm going through every day, and I'm finding trend trades, HVA trades, momentum trades, management ideas, termination conditions. So feel free to steal this and start going through and find these looks and study these looks. And then, of course, there's a trend trade because the trend is your friend. No areas reached on the 15-minute chart. No areas reached on the 1-minute chart. So there's your one subtle difference, is you're not trading into areas, small or large. Buy or sell a close on the correct side of the small triggers at a mid-band. Absolutely. Take care, Cav. No. So, Gary, TradingView is a platform, the same way NinjaTrader is a platform. You can practice trading on TradingView all day long. They've got, when you go, they have what's called paper trading, and that's your simulator. Get 1,000,000 repetitions, man. Get 1,000,000 repetitions. No areas reached. No areas reached on the small chart. Sell a close on the correct side of the small triggers. And that goes back to the don't fight the triggers. And then sure enough, beautiful trend trade, down it goes. And then finally, there's a momentum trade. And the momentum trade is what I just showed a minute ago. When both charts are screaming in the same direction, buy a snapback to a zone. Buy a snapback to a 1-to-1, to a mid-band. And John's absolutely right. There's nothing you can ask that Google doesn't know the answer to. But of course, we're here. I want to give you as many answers as I can. So this is a great example. Guys, notice how the zone is never broken. And the small charts had some fluctuations. There's your HVA trade long, Bob. Zone holds, triggers roll, buy the green line. Off it goes. And then it gets to the zone. Zone holds, sell the pink line, and down it goes. Probably, Gary. Keep asking your questions. Keep asking your questions, man. I'll get you your answers. No, Doug, we're not moving away from NinjaTrader. We're opening a funding company for you guys. And one of the things for the funding company is we're going to use a platform that's supported by the broker, and that's TradingView. And TradingView has about 60 million users worldwide. I will still teach. Are you working on educational video series to teach your trades without violating CFTC rules? Better Dad, I won't ever violate CFTC rules. And my video series is right here. Right here. So when I start doing the classes for TV, the goal, Better Dad, it'll be nice because I'll be in your backyard, is we're going to teach NinjaTrader. So Doug, we're going to stick with that. And you're going to get NinjaTrader 101, Next Gen Software Services Education Room. I'm going to go eat a sandwich, and then I'm going to come back. And then I'm going to teach a TV version where we go through the indicators, where we talk about the advantages, and where we teach the rules for the trade. And then probably the afternoon will be more live market stuff, guys, because to be honest with you, I can't spend an hour and a half on these trade rules. There's only 3 rules, and I think the rules are pretty simple. And they're either met or they're not. No trades into zones. I got it. We can teach live in a chat. We can teach, trade, do whatever we want as long as we don't tell you what to do. So you guys have heard me say a million times, I don't give trading advice. I don't tell you when to enter. I don't tell you when to exit. I teach you to read your charts. And if the rules are met, I'm allowed to say, hey guys, the rules are met. And then what you do with that is totally up to you. Zero desire to piss off anybody in the CFTC. And guys, I don't see rules met on 3 different charts, 4 different charts. Crude oil is directly into a zone. I'm sorry, gold is directly into a zone. Crude oil is indecision on the triggers. So I'll look to the small chart as a tiebreaker, and the small chart doesn't have the momentum I need to sell, so I'm in a holding pattern. S&P, there's that zone. Man, I'm trying to find a way maybe to take a long trade, but it's not setting it up. I can't take a short trade into it. Just joking about how CFC rules and trade rooms are for educational purposes only. Yeah, always. Yeah, always better, Dad. It's just educational. Andy, do you see the tabs up top? Bingo, bango, bongo. That's it. That's how you change them. Do you have them up here like this? And one thing is I don't use the browser. I use the app. So guys, there is a TradingView desktop app. And I love this. This is the same one that I use on my, that I'll have on my iPad. Is I'll use the TradingView desktop application. So I'm not actually in a browser. I'm in their little pop-out. Yeah, I love doing it on my iPad. I've got one of the big ones. And then John, there's a good thing, guys. If your indicators are showing and clouding up your screen and you have OCD like me, just hit the little button and it knocks it out of the way there. Yeah, it took just a little bit. No, Steve, no crashes on TV. Nothing but confidence on TV. No, I haven't had one. Haven't even come close to one. All right, Jen. So interesting, Mark. We have odds favorable minimum on the large chart, mixed triggers on the 15-minute TradingView CL. Makes you realize you got to stick to one brokerage firm. They're going to look a little different, Jen, but I trade with my NinjaTrader open. I execute on NinjaTrader. And I respect the zones on this chart. All I take is trend trades on NinjaTrader, but I use my TradingView zones and don't trade into them. And Steve, that was one of the questions you had, and I tried to respond twice and it bounced twice, is I trade a 34 NASDAQ chart, and I only take trend trades, odds favorable, clear path. And I don't even run tick data on it. And I respect the zones on the NinjaTrader as well. So it would be no shorts for me if I were doing that. And it would be maybe just a little too soon for longs. So you can go, there you go. John does it backwards. He's all wrong. I put my NinjaTrader on the other side. But this is it right there. 34. So even if you were thinking trend trade right here, that's where it went into the zone, and look at the bounce, right? And if you were thinking short trade right here, that's where it went into the zone. Look at the bounce. So being able to use 2 advantages are good. They're pretty awesome, Jen. You know how to do them. You took the class. And one of the greatest things, guys, yeah, rare, don't fight triggers, but when your 15-minute and your 1 minute are screaming in the direction, guys, that's gold. That's odds favorable, clear path. Oh, Jen, you took the ale class, right? So John and I used to draw these in. all the different time zones. And we would go back and forth with one another. And honestly, I hate to say it, John's were better than mine because mine had the human element. These are completely created and mathematical. And that's why I stopped drawing them and I got these. I became a believer. I love it though. I mean, guys, I'm excited about it. I hope you get excited about it. I hate change. John Novak will tell you, I hate change. John would tell me at 7:30 a.m. or 8:30 a.m., I need you to teach the class different, and I would have a meltdown. I couldn't do it. It killed my juju. I hate change. I love TradingView. It took me a week to like it, and it took me a month to be super comfortable with it. And honestly, I can't imagine doing this without it. I love it. And here you go. John says, check it out. There is a termination, a zone. Your triggers are rolling here, and your 1 minute is trying to break above a zone. We'll see what John says on this chart. Oh, and John said because of that, take the half bar up. You took the half bar up, not the pullback. You let it go in the direction of the trade. Late entry waiting for close above the 1 minute zone. Yep. But what does the 15 minutes say? It still says down. Was a trick. But that's it. The two charts work together. And John's doing that. John said, hey, let me remind you, two charts work together. The likelihood of success goes up when you use them together. And that's what Nexgen's been teaching for 20 years, guys. 30 years. All charts did not agree, and he tried to make it happen. That's it. All right, guys, questions? What can I do for you? Z-Robot, good to see you back in here. Long time no see. Miss Jen, I thought we were fighting. I hadn't seen a chart from you. All right. So you got your Algo Alpha, and look at that. It works, doesn't it? And yes, you guys do get John Novak next Friday, and we will have live funding next week. I love it, Jen. And Jen, I want you to be every bit as vocal with TradingView as you learn it as you were with NinjaTrader. You're such a great student. Like, don't hold back, especially because it's new. And that's everybody. Don't hold back. We're learning something new, guys. I've been going through this with John Novak. John Novak, the John Novak, for the last 6 months. And he's made me pretty smart. He's kind of a big deal, guys. He has a library. It smells of rich mahogany. A lot of leather-bound books. Hit your target without you. Happens sometimes. Sounds like it's time for Mark to go away. All right, let me stop.